In this video, traders, we're going to look at CFDs or Spreadbet. Stay tuned. Hey guys, a very warm welcome to you. Alright, so this video is sponsored by our channel sponsor, which is Core Spreads. There's a link to these guys in the description below. Go and check them out and see if they're right for you. They offer CFDs and they offer Spreadbet, which is why I want to look at 3 reasons for each of these why you might want to trade a CFD or might want to trade a Spreadbet, because they offer both accounts. So go and check them out, link in the description below. Anyway, CFDs and Spreadbet. Let's have a look at Spreadbet. So the biggest thing with Spreadbet, of course, is there's no capital gains tax to pay on your trading profits, and there's no stamp duty to pay. Now, individual circumstances could vary and tax laws can change, all that kind of stuff, but that's a real big reason that people in the UK will trade via a Spreadbet. They'll open a Spreadbet account because of that big perk. And the next thing, guys, number 2 is you can trade to suit your risk and account size. So yes, CFDs are similar in many ways. However, you know, with a Spreadbet, you can trade. There's no, by the way, there's no minimum account size opening, so you can open an account with Core Spreads. You just put a minimum in. You just got to have enough to place the margin on whatever trade you want. So whatever margin requirements, that's going to be your minimum, so to speak. So you can open the account, check it out, play around, and have a little look and see what's going on. But they've got stops. You can go short or small position size. You can trade, and you can trade to your style and strategy as well. So if you're day trading, you're not going to pay any overnight financing charges. If you're spread betting, which is great. So if you like to day trade the FTSE, you like to day trade oil, you like to day trade the DAX, or you have a specific share or stock you like to day trade, Facebook, Lloyds, etc., you're not going to pay an overnight charge for it. You're just going to pay the spread, and they say go and check out the spreads if they suit you as well. So you just pay the spread intraday. You can trade a small position size. If you want to, as you grow, start to increase your position size, then that works as well. So another reason there, guys. Number 3 is you can bet on up or down movement of thousands of markets. So if you think, for example, well, you know what, I think gold's too high, you can bet with a Spreadbet on a down movement of that gold price and make money from the falling gold price. You can do it on some cryptocurrencies as well. Core Spreads offer cryptocurrencies, Bitcoin, and a couple of others. Go and check them out. You can see what they offer. They're adding and changing markets all the time, adjusting spreads. Currency pairs, let's say you think the US dollar is overvalued compared to the yen, you can speculate on that. So you can do both ways. So if you want to be long and make money from one market going up, or have that bet, then that's available to you, and another market you think that's going lower. So you can have multiple markets, multiple different position sizes, all wrapped up in a Spreadbet, so you get the benefit of the tax-free or no capital gains status. Another thing, guys, is CFDs. So look at CFDs. So CFDs are a slightly different product. It may look very similar on the face of the platforms. You check out the Core Trader 2 platform, very similar, but generally speaking, CFDs have a few little nuances that aren't available to Spreadbet and vice versa. So CFDs, the big thing with CFDs is you can hedge your share portfolio by short selling. Because you might think, well, okay, obviously there's no tax on Spreadbet, so maybe I want to go with that. But actually, the fact that you have a tax liability with CFDs means that you can use it as a hedge. How does that work? Well, let's say you've got a basket of stocks, or let's say, for this example, let's say you've got one specific stock that you don't want to sell for whatever reason, but you want to hedge, and maybe let's say you think the next quarter is going to be a down quarter for that stock. So rather than selling the stock and all the kind of gains and paperwork potentially you have to do with that, then you could short a CFD. So short an equivalent CFD, let's say you've got 10,000 shares of stock, short 10,000 CFDs in the stock, you're now net neutral on the position. So this is why it's important with the tax status. If you make money on that CFD, then you'll be losing money on the actual share, you offsetting your tax status. And obviously seek an accountant and financial advice for this, but the point is, if you, let's say you lost money on the CFD, you want to be able to reclaim that loss against the gain that you've made in the share position. If you'd lost money on the Spreadbet, you couldn't reclaim that loss on your tax, you couldn't use an effective hedge basically, because you've still got a tax liability on the stock that you're owning. So that's why people will use CFDs to hedge a share portfolio. Okay guys, so number 2 is the leverage. Of course, when you're comparing CFDs, let's say, to traditional stock or traditional shares, you want to buy 10,000, 100,000 pounds worth of a share. £100,000 comes out of your account, you're buying the shares as an exchange of cash for asset. If you're using a CFD, a contract for difference, the contract means that you only have to put a percentage of the trade value. So if it's a 5% margin or 10% margin, 30% margin, varies from instrument to instrument. But let's say it's 10% margin. If you have a £100,000 position, you only have to put up 10,000. So it means you can then be a little bit more aggressive with your portfolio. Yes, you've got financing charges to pay, but if you have a shorter term view than say a few years, and you have to work that out for yourself based on your kind of objectives for investing and trading, but you can control more money theoretically because you're trading on margin rather than you've got 100 grand just buying stock and that's it. Your 100 grand could be spread around 5 or 6 different assets, so you're controlling a larger amount, and so you're potentially going to make much more money if the trades go in your direction. But of course, if they go against you, then you're going to lose money as well. So it's a double-edged sword, but if you're using it prudently, it can be an effective tool, which is not available to traditional kind of buy from your average broker the stock and exchange that for cash. Final thing, guys, is multiple markets from one account. If you were going and trading, let's say you're going directly to the exchange and you were trading, you wanted to trade futures and you wanted to trade a US stock and you wanted to trade a UK share and you wanted to trade a currency pair, those you'd have to go to NYMEX, say the exchange. If you're trading crude oil, you'd have to then go to the LSE to trade your UK bank stock. You'd have to then go to NASDAQ if you want to trade some tech company. You'd have to have all these things, all these different accounts, etc., and it becomes a mess. It's very difficult and challenging to kind of keep an eye on this. Have I got some currency exposure here? Have I got this? Have I got a fee to have that account open? What's this? What's that? Whereas if you're trading a CFD, you've got one account, so it's all rolled into one, and you can trade, hey, I want to trade crude oil from here, I want to get exposure to that tech stock from here, I want to get exposure to that UK bank stock, for example, from here, share from here. So all one account, very easy to manage, makes things life a lot easier for you. So that's it, guys. That's 3 reasons to trade CFDs, 3 reasons to trade Spreadbet. Video is sponsored by Core Spreads. There's a link to these guys in the description below. They offer a CFD account and a Spreadbet account. Go and check them out. Take care. Bye-bye.